The silver test. Are you psychologically ready for what's coming? Most people who own silver right now will not make money, not because they're wrong about the fundamentals, not because their timing was off. They'll lose money because they'll sell at exactly the wrong moment. And the market will be specifically designed to make them do it. I've spent years studying how commodity bull markets actually play out, not the highlight reel version you see on YouTube, but the full, ugly, gut-wrenching journey. And what I've found is this: the biggest obstacle between you and life-changing returns is not the market. It's your own psychology. Today, I'm going to give you an honest roadmap for what silver holders are likely to face, and more importantly, how to survive it. Why most holders fail before the real move. Let me give you a real historical example. From mid-2020 to early 2021, silver ran from roughly $12 to $30. That's a 150% gain in under a year. Sounds like easy money in hindsight, right? Here's what the chart doesn't show you. Along that exact same route, silver suffered 7 separate pullbacks of 10% or more. 7 times holders watched their positions bleed. 7 times conviction got tested. In one 2-week stretch alone, silver fell over 20%, from nearly $30 down to under $24. Thousands of people who had been holding patiently through the whole rally finally broke at that point and sold. Then they watched silver climb back to $30 just months later. They were right about the direction. They were right about the asset. They just couldn't survive the shakeout. That pattern isn't unique to silver. It's the blueprint for every major commodity bull market in modern history. The 1970 silver run took nearly a decade and had 14 major corrections along the way. The gold bull market from 2001 to 2011 included 34% collapse in 2008 that wiped out confidence across the board, only to be followed by gold eventually tripling from those lows. Bitcoin went through a 38% crash in early 2017 before going on to its legendary run. In every case, the people who built wealth weren't the smartest traders. They were the ones who stayed. What could happen next? 3 scenarios to prepare for it. I'm not here to give you a price prediction. I'm here to give you a psychological framework, because knowing what could happen is the best armor against reacting emotionally when it does. Scenario 1, the sharp correction. After a fast rally, silver pushes notably higher over a matter of weeks. Sentiment turns euphoric. Social media fills with aggressive price targets. New buyers flood in near the top. Then, just as quickly, price reverses hard, dropping 25 to 30% in a short window. The headlines declare the rally over. Panic sets in. The holders who survived the entire move up give up right at the bottom, selling into maximum fear, and then silver quietly turns around and begins the real leg higher without them. Scenario 2, the slow grind, lower. There's no dramatic crash, silver just drifts. Down 3%, then another 4%, then another 5%, week after week. No clear bottom signal, no capitulation spike, just relentless, soul-crushing decline. This scenario breaks more people than a sharp crash does because there's no dramatic moment to steel yourself against. It just wears you down over months until you finally surrender, usually right before the reversal. Scenario 3, violent whipsaws. Price swings sharply in both directions with no clean trend, up 8% one week, down 11% the next. Every time you think you found a pattern, it breaks. Traders trying to be clever get destroyed. Even long-term holders start second-guessing themselves. The chaos is exhausting. People exit just to stop the mental noise. And that's usually the signal that the whipsaw phase is ending and a real trend is about to begin. 3 very different scenarios. One common outcome: most people sell before the move that matters. The 3 things you need to hold through anything. First, know exactly why you own silver, and it can't be because the price is going up. Price-based conviction evaporates the moment price falls. You need fundamental conviction, structural supply deficits, growing industrial demand in sectors like solar and electronics, currency debasement, geopolitical instability. These are reasons that don't disappear when the price drops 15%. If you can clearly articulate why you own silver independent of its recent price action, you have a foundation to stand on during a shakeout. If you can't, you're just momentum trading with extra steps. Second, size your position so that a 40% drawdown doesn't destroy you. This one is uncomfortable but critical. Ask yourself honestly. If your silver position dropped 40% tomorrow, could you hold it without panic selling? If the answer is no, you're positioned too heavily. This isn't pessimism. This is how you survive long enough to win. The person who holds a properly sized position through a 40% drop and rides the subsequent recovery will almost always outperform the person who went in too heavy, panicked, and sold at the bottom. Reduce the size until you can sleep at night. You'll thank yourself later. Third, extend your time horizon further than feels comfortable. If you're thinking in months, you're thinking wrong. Major commodity bull markets take years to fully mature. If the current silver cycle follows historical precedent, we could be looking at a 5 to 7 year run from the lows. That means there are years of volatility still ahead, years of tests and shakeouts. The people who rode gold from $300 to over $1,900 weren't watching charts every day. They bought with conviction, positioned appropriately, and mostly left it alone. Boredom, it turns out, is one of the most profitable investment strategies ever discovered. Or Dries, how to know when to actually sell. Holding long-term doesn't mean holding forever. Here's what to watch for when the cycle is genuinely ending. Watch for parabolic, unsustainable price acceleration, price doubling in a matter of weeks with no consolidation. Watch for mainstream media saturation. When silver becomes a topic at dinner parties and cable news segments, the crowd has arrived and the crowd marks tops. Watch for fundamental shifts. If supply deficits reverse, if industrial demand softens significantly, the underlying case changes. And watch for extreme historical valuations relative to gold or other benchmarks that have never been sustained for long. Until you see those signals, the noise around you, the scary headlines, the paper losses, the doubting voices, is just the market running its standard shakeout playbook. The honest truth. The next phase of this market will feel terrible at times. There will be weeks where you question everything. That discomfort is not a warning sign. It's the price of admission for what comes on the other side. The people who build real wealth in commodity cycles aren't the ones with the best predictions. They're the ones who prepared mentally for the hard parts before the hard parts arrived. You now have that preparation. What you do with it is up to you. If this gave you a clearer picture of what's ahead, share it with someone else who's holding silver, and subscribe, because I'll be tracking every stage of this market as it unfolds. See you in the next one.